Hi, I'm Alex Theuma, and welcome to the SaaSholes Podcast. Not sure what I'm doing here, but I've got a crispy duck chicken to pick up at the local Chinese grocers. But instead, I'm on the SaaSholes Podcast, and let's see what happens.
Welcome to SaaSholes. We are revenue ops with an edge. With decades of making interesting decisions, Jamie, Jason, Marcus, and Pete are dedicated to helping aspiring sales leaders accelerate revenues with our no BS approach to sales leadership strategies and tactics. Our show is supported by viewers and listeners just like you on patreon.com/SaaSholes. Brent Keltner's Winalytics Revenue Acceleration Playbook Masterclass. In only 8 weeks, help your sales and go-to-market teams start to build the mindset and skills needed to succeed in the new buyer environment. Weeks 1 to 3, read the book and learn a new approach through 20 successful company stories. Week 4, all go-to-market team kickoff and receive self-reflection questions and mindset self-assessment. Weeks 5 to 7, collaborative sessions with prospecting, sales, and customer success on the shared journey to a new mindset. Week 8, all go-to-market team presentation and discussion. Winalytics, build the revenue organization you want. Request a free 60-minute growth consultation at winalytics.com. Ask for Brent and say Big Pete sent you. We got some shout outs to do. Melanie Francis, 3 years at Global Search RC. Maravella, 3 years at Cultivate Advisors. Peter DeGate, got a new gig, National Sales Leader at Crossview. Joe Petroselli, promoted to Enterprise Retail Account Director at SalesForce. Ryan Lockwood, got a new gig as Tessitura Manager at Dr. Phillips Center for the Performing Arts. Harrison Snyder, 2 years at Fivetran. Ray Sitowski, new gig, Senior Accounts Director at Solution Partner Services. Nathan Gard, 5 years at Talent Thrive. Nicole Schwabager, 1 year at Gartner. Angela Malloy, got promoted to Senior Outreach Coordinator at Beyond Booksmart. Natalie Furness, got an additional gig as Founding Member at Customer Data Automation. Kevin Drolet, 4 years at KDRO Consulting. Ryan Dishman, 2 years at Twilio. Alicia Capraro, promoted to Senior Enterprise Solution Consultant at Docusign. Lorena Morales, got an additional gig as Founding Member at Customer Data Automation. Amy Freeman, how you doing, old school? New gig, Licensed Associate Real Estate Broker at eXp Realty. Tyler Benson, how you doing, buddy? Got promoted, way to go, Senior Sales Engineer at Comet Sold. Ed Sweet, promoted to Partner at Hydric Struggles. Way to go, Ed. Ian Mays, what's up, Iowa? Got a new gig as Enterprise Client Partner at Mentor Click. Jasmine Wente, 5 years at Work Tango. Tony Roy, 6 years at Pop Menu. Way to go, old school. Speaking old school, Tim Birmingham got promoted to Senior Customer Success Manager at Verizon. Way to go, buddy. And we got some happy birthdays. Jim Vermillion, Anna Parks, Pat Gleason, Matthew Wagner. Another spin around the sun. All right, Alex Theuma, thank you so much for coming on the SaaSholes Podcast.
Yeah, good to be here, I think.
It's early.
I'm looking forward to see where this goes, but good to be on the other side of the podcast table or microphone.
And the pond. Speaking of pond,
yes.
What is SaaStock? You got something coming up in May, don't you?
We do. We are hopping the pond. So maybe you can tell by my accent that I am in the UK. Actually, a lot of people think I'm Irish because we have a conference in Dublin, which is in Ireland, if people didn't know that. And so whenever I speak to people, they just assume that I am in Ireland every time they speak to them. But actually, no, I'm in the UK, but we run SaaStock, and SaaStock is the biggest SaaS conference in Europe. And we also, have been doing content for 8 years for SaaS companies and SaaS founders, like including the podcast. And we're bringing SaaStock to Austin. We hear it's the hip happening place. It's got similar-ish vibes in some senses, but better weather than Dublin. And we're bringing our conference there and looking to grow and scale that out to the size of our Dublin conference and really just add like a ton of value and fun. With SaaStock there's a lot of fun in SaaStock. It's not just all the learning and business stuff. And bringing that to Austin and having a great time, great party, and really kind of kicking that off. So that's May 31st to the 2nd of June. And I will be going to Austin for the first time. So bit of a risk, like running a conference in a place I've never been to. I might eat a lot of barbecue whilst I'm out there and be, a little bit heavier on stage, but it's okay. It's a risk I'm prepared to make.
So SaaStock, you have keynote speakers. You're talking about SaaS, educating. What is SaaStock?
Yeah, good question. A good place to start. So, SaaStock, we help SaaS founders grow and scale their businesses, and really we do that through our conferences, our events, our content or media. So, blogs, podcasts, short form video stuff that we do, YouTube channel. And then also through lately, since 2021, our memberships offering, where we are building, and this is the vision, the world's leading support organization for B2B SaaS founders. Our particular niche within SaaS is SaaS founders that are on their journey from 0 to 10 million in revenue. That's where we kind of really work best, and it's our sweet spot. So anyone really kind of from, pre-revenue all the way through to 10 million, and we help across the multiple stages of the journey. So our conferences was kind of the first thing that we did was the conference in Dublin. We did content before that, which led to building an audience, which led to the conference. And we had 700 founders from 34 countries come to that event in Dublin. Speakers like David Cancel from Drift was there when Drift was probably like Series A or something like that. I remember he was a little bit bummed, but in a nice, polite way, of being on the smaller stage, because he flew all the way over from Boston, and we put him on the smaller stage, and he wanted to be a kind of main stage guy. But I said to him, "You got back to us really late, so you got on the small stage." But he delivered great content, and we've seen companies like Chargify. You might know or have heard of them, sort of subscription billing platform. They were there in the first one. The founder, Krish. Well, they were Series A as well, kind of like smaller organization, and now they're Series F or something like that. So we've seen, all these companies kind of come through SaaStock and really kind of grow to, in some cases become public companies, and, a whole great, gamut of, SaaS leaders, entrepreneurs, execs have spoken on the stage, and loads of VCs as well. So this is our 8th year, and we've had 6 conferences in Dublin. The last one was last October, 4,000 attendees from 60-something countries. And we had a 2-year hiatus because of this thing called COVID, which really kind of sucked if you were organizing mass gatherings, which we did. It kind of didn't work for our industry.
So, Alex, what do you do at SaaStock?
I'm the CEO and founder. So I didn't mention that, but I founded SaaStock. Love it. Like my first time as an entrepreneur. It has its highs and lows, and I haven't actually got any gray hairs, which is maybe, I don't know, like a good thing. But I have lost a lot of sleep, over the years, and especially like 2020 was shit, because of COVID. Like the business could have died, in that year. We went from 20 people to 9 people. That year, and it was all about getting survival and steering the ship through, which we did. So that was definitely the hardest, sort of darkest year for us. But I've made mistakes, from the get-go as well. I mean, the first SaaStock, because I didn't, I'd never run conferences before. I think I lost £60,000 on that one, and when the realization hit me before the event that look, we're not going to be profitable, and I'm in I'm in the red for 60K. And at the conference itself, which went really well, people said to me, like, you don't look great, like what's up? And effectively it's because I pretty much had like an anxiety attack during the night, not slept, because I was thinking like, fuck, where am I going to get the 60K from? But what I didn't do was do nothing. What I did was just leverage my sales skills to basically, after the event, sell for the next year, and generated 100K, like, almost straight away, which covered the shortfall. And so from a cash perspective, the business model was good and kind of helped me there.
Yeah, you're throwing a party and you're praying somebody fucking shows up, right? How did you start 8 years ago? Were you writing blogs and then you built it up? Like, tell us about the growth path.
Yeah. It's almost like, in a way, I fell into it. But I fell into it by design, if that makes sense. So basically, I was actually a sales exec, had a software company, a Russian software company called Parallels, but they actually positioned as a US-based company because I think they had their HQ in Seattle, Washington, but really it was, of Russian origin, but I mean, not that it matters. And it was a 1,000-person company, and I was selling their software for 3 years, enterprise software to telcos. I got to 30, the age 30, and was just thinking, what am I going to do the rest of my life? And am I ever going to do this entrepreneurial thing? But I didn't know what it was at that point. And in my 20s, I had so many entrepreneurial ideas, but I never had the drive, never acted on them. And then I was like, this is my moment. Like, what am I going to do? Without knowing, I just pushed myself outside my comfort zone. And I decided to start a blog. And I thought I'll do a blog on SaaS because I'm selling cloud computing software. But actually very quickly realized limitations there that, I've never written a blog before. And therefore, ergo, I must be probably not a good writer. I mean, I'm not sure whether that is true if you've never written a blog before. But in general, I was not a very good writer. And also writing a blog on SaaS, I'd never run a SaaS business. And I wasn't, really in a SaaS business. So what did I know about SaaS? So I thought these are quite, two strong limitations here and destined for failure. But actually, I turned those big limitations on their head to make them strengths. And what I did, basically promoted myself or moved myself into the editor role. And I convinced other people that knew what they were talking about to write content for what was called SaaScribe. And they bought into the why because they wanted to help other people, but it also gave them a platform outside of their own writing blogs. And we started creating content, and I was kind of churning out 5 pieces a week. And then after 3 months, we were getting 30,000 visitors a month. And, it's kind of like, it had some good traction there and people emailing me and enjoying what we were doing. And then I thought I'd start a podcast to supplement it. Never done a podcast in my life at that point. I shit myself on the first podcast, not literally, but figuratively there. And I was just kind of like, very nervous. And I was speaking. My first one was with Marc Roberge, who's the CRO of Hubspot at the time. And he had a book out, and I was like, I still know nothing really about SaaS, or not much. And I'm interviewing Marc Roberge, and it's kind of, you have that imposter syndrome when you're speaking to, somebody that's built a company and their revenue teams to 100 million. And I got them on the podcast, but I got through that. And from there, kind of built up the podcast, still doing it 8 years later. So one of the OGs in the B2B podcast space and in the SaaS space. And really enjoying that, hopefully getting better at my craft. That was kind of it. And then we built the audience from the blog and the podcast. And then I started doing some meetups. And then the audience told me, like, hey, we want a conference in Europe. Why don't you do it? And you seem to be doing, the blog and the podcast, and you've done some meetups. You seem to be the guy that's probably most likely. I was like, never run a conference in my life. What the fuck do I know about like running conferences, right? I knew nothing. And the added layer of complexity was that my partner was 6 months pregnant, and she'd given up. She was a freelancer in TV, so her income was gone. So I only had the salaried income from Parallels at the time. But then I really had that entrepreneurial kind of like drive to say, this is my moment. So I told my partner, I'm giving up my job. I'm giving up the only income that we have to go all in and this thing called SaaStock. And she said, why don't you wait 2 years? And I was like, if I wait, it's never going to happen. Somebody else will do it, or I won't, have that same drive. And then rest was kind of history. I mean, there's a lot of history in between that, but that was kind of the founding story, right, when I got started.
Your background on selling, we had Brian Elsesser from SaaSter on, and we were talking about throwing an event, and everybody wants leads. What's the value that you're selling? Because people are going to say, well, I'm going to give out these, marketing forms or email addresses. And the business that they get from that, I mean, it's like a speed dating for people with money and people that want money. Yeah, it's hard to put a value on that. What is the value that you're selling when you're going out there? Because you got to get the sponsorships, then you got to put up, the money to hold the place, and then you got to give value to the people that gave you money. So how do you do that?
Yeah, good question. So basically, we've got 2 customers, right? I would say there could be a third with the VC side, but if I focus just more on the SaaS companies, and basically our profile is the founder, and then we've got probably somebody in marketing, right? And on the founder side, and these are the attendees in general that are coming to the conference, what do they want? They want to meet other founders, right? They want that peer-to-peer support. They want to, feel like they're not the only ones in the world that are going through these things, and learn from others, and have, share war stories and have these conversations in the corridors of the conference room, also in the pubs of Dublin, over several pints of Guinness, right? They want to learn. They're kind of mainly learning and networking, and some come for business development opportunities. But I think the learning and networking is the main kind of focus for the founders, right? So we help them around that with the great content that we put on across the multiple stages, and the fact that we're bringing thousands of, people like them into one roof and one city for a few days. So that's the value proposition for them. Let's say the SaaS companies that sponsor it, and they exhibit at the conference, what do they want? Brand awareness, but mostly leads. It's mostly leads, right? And thought leadership as well, right? So they kind of want these three things. Brand awareness, quite difficult to manage, measure. But if they have a, let's say typically like a Series A company in Europe, in the instance with the Dublin conference, raise 20 million. They're not well known. They sell to SaaS companies. They come to SaaStock, raise some awareness for them, their company, their founder, right? And we see that a lot. They also, in generally, want to get leads, and they'll measure the ROI of the conference based on the amount of qualified leads, so marketing qualified leads, sales qualified leads, and then how many conversions, how many converted to customers as well. And it's not cheap, right? I mean, we're talking about, pricing starting at 30,000 euros, right? All the way up to, 500K, right? So it's a niche conference with a great quality audience. But the marketers who are investing, in SaaStock or other conferences really need to know that they're going to get ROI from this. And some take a little bit of a bet, and there's a bit of a risk. But also, we've got great retention. So, the likes of Chargify, Mogul, Profitwell, which is now Paddle, but even Paddle as well, have been with us, for 6-7 years, and year over year they renew and they grow their, partnership with us, and therefore their spend. And in some cases, 4 or 5 deals from the hundreds of leads that they'll get will pay for the sponsorship, and then some. So yeah, we get that. And the first customers were actually Mogul was the first one, and I met their CEO at Web Summit in Dublin in 2015. And we had a conversation in person. He knew me from the blog, so there was already some bit of credibility there, and a bit of authority. I had a conversation. I said, I'm going to do this conference in Europe. If I did it, you sell to SaaS companies, would you sponsor? He said yes. Within a month, I had the website up, I had the venue confirmed. I went back to him. I said, you said you would sponsor this. Like I've put up a web page, and I've got a date in the diary, and they were the first partner. And then, funnily enough, the second partner was Profitwell, their competitor, who obviously saw that Mogul was sponsoring. And then Patrick Campbell, called me, and then we did a deal on Christmas Eve, which I wanted to relax on Christmas Eve, but I had to do a deal with Patrick Campbell. But it's all good. And yeah, that gave me, more runway, right, to kind of run the business, because it was customer funded, at the time.
So this is your first event is coming up in Austin, right, in the U.S.
Yeah.
Does that mean most of your client base right now is EMEA, and you're trying to expand in North America? There's some in North America.
No, I mean, I probably should know this, but I don't know the exact split. Yes, are we trying to expand in North America? 100%. A lot of our client base are US based, certainly from the exhibitors side of things. So companies like CapChase or FounderPath, Velocity Global, a lot of like the companies that exhibit with us, Outreach, ZoomInfo, etc. You get the picture. They're all based in the US, and largely they sponsor the Dublin conference because they're expanding into Europe, because they're looking at that geo, and they want leads from that conference. But then the benefit for us is now we have these customers and these partnerships with these companies, in many cases for several years, and they don't only operate in Europe, and then they have different teams with different budgets in North America or South America or Asia Pac or whatever. But in this case, we're going to the US, and then we can speak to the same customer and say, hey, CapChase, like we're also doing a conference in the US, and we're doing it on the 31st of May to the 2nd of June. Are you interested? and then more often than not they say yes, and send over the details, and then they sign up for that. But we obviously want to grow the customer base beyond existing customers, and this is an opportunity for us for new logos coming in, from the partnership side and building new relationships. And in some cases, these companies might be Series A or whatever, and when they get to Series D, and if we retain them, they may then come to the Dublin conference and grow and expand their ACV with us by supporting across multiple events.
So with the you're dealing with SaaS companies, startup SaaS companies. What with the economy, what are the big trends that you're seeing now, and what do you think is going to happen in the next 6 to 12 months or even further? What are your we're not going to hold you accountable. I mean, you're one of 10 listeners on this.
Well, how do you build a recession-proof team?
Yeah. Well, exactly. But I mean, obviously, I can talk to it, for some of my experience and obviously what I'm seeing. And yes, please don't take what I say for gospel, and I don't quite have a crystal ball. But let me just say a little bit from my experience. So what we are seeing with our customers, we actually, obviously, like many companies, quite concerned about we're going into a year with a lot of doom and gloom. Everybody's talking about recession. There's all these layoffs happening, right? What does that mean, for us? What do we need to do, as a business? And how is that going to impact our customers? And what are they going to renew with us, and so on and so forth? So obviously, from our side, we are, looking, being cautious around managing costs and investment, and not scaling up too fast with hiring. But we are effectively a bootstrap business, and we've been running our business, like a bootstrap business. So we're pretty capital efficient, profitable. We're not going crazy and hiring people for 12 months that, in 12 months time that we don't, now that we need for 12 months time. And so we've not needed to kind of make any layoffs or kind of major changes to the plan. And actually our plan for this year has an ambitious 60% growth on revenue. And part of that is because we're expanding internationally, as well. And the growth on the Dublin event and our international expansion. So when we're speaking to our customers in Q4, a lot of them, and some of them we took them out for lunch, some we just kind of, we're speaking to on the phone or email. They were all doing their budgets in Q4 and Q1, right? And they're all obviously then looking at what's happening in the market and speaking to their CFOs and seeing what they do. And we were told that, in some instances, they had 3 plans, right? One was a, go big kind of plan. One was a let's go for growth. And one was, okay, we really need to be kind of cautious and really kind of limit anything that we do kind of this year. And what we've found is most of our customers are kind of sitting in the middle. They're not going for their let's go all out for growth this year, because I mean it would be pretty kind of tone deaf, if they did that. And they're being a bit more cautious. So what we're seeing is that a lot of them are kind of matching their spend or maybe slightly increasing their spend with us from last year. But they're saying to us that they wanted to go bigger, but because of the market, they're not going that much bigger. So they are renewing, which is good. And we actually had a record quarter last quarter for Q4. Which was good. So it's given us a bit of peace of mind, and also January is turning out to be strong for us as well. So actually we're seeing for us that the market in SaaS, in the space where we play, is actually still pretty healthy. Everybody is being cautious and not going clearly not going to kind of too crazy with their certainly conference spend. So it's kind of good news for us. I think where the challenges lie is obviously some of the public companies, their valuations have been massively hit, and therefore that they've kind of drastically reduced a lot of their spend on some of the events that they're doing, we don't have a lot of those as customers. And I think in the instance, and happy to say this, let's say Zoom Info, for instance, was a customer of ours last year. This year in 2023, they're not renewing with us for the moment, based simply on the fact of what's happening kind of in the public markets. So that's in terms of the impact to our business. We are still getting a lot of existing and new business. It still seems pretty positive. Nobody's going crazy on the spend, even though it's kind of not cheap. We're hearing things like from one company. They did something like 124 events last year. And now they've cut it down to 50, and we are one of those 50. So significant cuts in, the amount, but we're seen as a core or key event, and that's kind of good for us, and I think testament to us as well. One thing that we're doing, we're seeing, you talk about recession-proof businesses. We did a documentary which is on our YouTube channel about how to build recession-proof revenue teams together with a company called Sales Room, and we filmed that at SaaStock in Dublin last October. And we've taken some of these kind of lessons, certainly on board. Things like time to close rate, right? Looking at that and just kind of making sure, what we call, I guess, kind of like our sales like velocity here, that we're really trying to keep a quick sales cycle kind of going. Once we've got the inbound lead, once we've got the meeting, that we are not letting this deal kind of stagnate, letting it run over a 1 or 2 month kind of period, but really kind of moving it forward and doing what we can around that. We're also freeing up, and we've been reading a lot about this, and mostly my MD Will's sort of been telling me about this, that he's been reading about it. So I'll give him the kind of credit, but about like taking away things from the sales team that are preventing them from selling, and things that they might not be good at, might not enjoy. So for instance, like we've got a sales guy who is our top sales guy. He's managing a couple of people. He doesn't really enjoy doing that. I think it's fine to kind of say, a lot of the admin stuff, like, strategy stuff, like you're not super keen on. What he's great at is meetings, converting those meetings. So we're taking away the stuff that he doesn't like to do. You just focus on sales and bringing in revenue, right? And we're kind of taking those responsibilities. Yeah, I mean, it's kind of early days yet, but again, hopefully that will kind of help him do even better than he is at the moment. Another just quick anecdote about what other companies are doing, and this was kind of shared with me yesterday. I can't remember the name. Big SaaS company. Their leadership team apparently are having end of day like sales huddles every day with their sales team, and like, what have we done today? What are the numbers? What are the stocks? Etc. So the leadership team getting involved on a daily basis with their revenue teams.
Couldn't that backfire? I mean, there's so much. I find sometimes people give too much criticism and not enough praise.
Yep.
When you have a daily huddle like that with leaders, all the leaders feel like they need to interject themselves and give an opinion.
Yeah.
Rather than just sit back and give an applause. Like,
yeah,
we've got to do more of, hey, great effort, let's keep going, rather than, oh, you should have done this, you should have done that. And I feel like sometimes the daily huddle might do that. I mean, I know a lot of people are cracking down on expenses, especially,
yep.
You hammer a little bit too much on a $20 lunch. Might sound like that $20 is going to make you go bankrupt. Like you gotta work a little bit on your on how you're portraying yourselves, because some of these people on the front lines don't know the situation in the back and are thinking and read into what you say or how you.
Yeah, no, 100% it could. I guess ultimately it's up to the leadership in how they're delivering that meeting. And obviously that's not something I can speak to, but if they are, let's say, having that balance, or, in terms of like praising and showing the examples of, the good work. I fear if
the leaders are all jumping on a call every single day, I feel like that might be portrayed by the reps as, one, micromanagement, two, as panic. Yeah. Right? Like I really feel like, I don't know, Pete, how would you feel if you were?
Well, if you're doing something out of the ordinary, it's panic. If it's part of a routine and it's part of the process, then it's fine.
But if you change that, or if you change that and become part of the process because of the economy,
I think if you get rid of the cadence calls, that could be a plus.
Yeah. You mean the forecast calls?
Yeah, the forecast calls.
I hate forecast calls. I'm over the entire forecast call here.
In your biz, you don't have that, do you, Alex? Or does the sales manager, say, hey, man, how much do you project to come in
What's
next
your
week?
What's your commit? Tell me what your commit is.
No, no, like I mean, I don't run that. Our sales managers report into our RMD, and obviously we're running, the sales pipeline through HubSpot. I believe they do weekly, kind of updating the sales forecast. Like we do need to know, like what are the deals that they are, forecasting to come in, and committing as best as they can based on kind of like weighted scores, and it's something that I think works pretty well for us. Obviously, we do then kind of question a lot their sales forecasts. So why don't you like it? And tell me?
Why don't I like the forecast call? Because
yeah.
it's a bunch of people guessing, and they're really, a lot of times it's posturing to save their job or save getting screamed at. The reality is, a person in the background can forecast just as well by looking at different metrics and historical performances, and all they need to know is some of the big deals. I don't need to have a weekly call that tells me that story time.
Story time.
I can have a weekly call that's a check-in and look at the data and say, help, a meeting was missed last week. Is that a red flag? Yes or no? No? Okay, move on. You hit your meeting last week with the client like you said you were going to hit. I don't need to talk about it. I don't need to know what's going on in that account every single week. Talk about micromanagement and a waste of time. Forecast calls are the waste of time. Sorry, I'll get off my soapbox now.
I think they work for a number of businesses, but it's I respect your opinion.
I'm very strong,
even though it's wrong, Jamie.
Even though it's wrong.
Hey, Alex, you brought up HubSpot. I'm sure you've seen what's going on with Salesforce. I don't know if you want to comment on it. You think they're starting to figure things out now? Who's looking better now? Larry Ellison or Benioff?
Yeah. Exactly. So, well, look, I mean, HubSpot. So we use the platform. I think obviously they've moved from being known as just like the inbound kind of marketing platform to actually figuring out the CRM space, and then just having a really great integrated sales and marketing platform. And for us, that was a key decision, that we didn't want to have like multiple kind of platforms, whilst Salesforce is kind of was, let's say, the best in class and certainly market leader within CRM, to have a Salesforce deployment.
You said was.
Well, yeah, I mean, like,
okay, good, all right.
They're the market leader for sure, right? But like HubSpot, I think, are definitely kind of eating their lunch, and kind of coming in from the types of organizations that are at the size that, let's say, that SaaStock is. Also, like HubSpot is, I think just kind of like much more affordable, easier to deploy. Not super easy, but it's easier to deploy. I think perhaps there's a more kind of like modern, UI and user experience. So the caveat is that we've never used Salesforce kind of CRM, but and I know they've had updates to UI UX, but you do hear of like a lot of companies saying, well, it's super feature rich, but it's not as easy to kind of use, and the UI UX is not the best with Salesforce, right? And I'm kind of putting it politely there. They might partner with SaaStock again at one point in the future. We'll see. But HubSpot seems to be doing well. As a business is growing. Salesforce is growing, but they're missing targets, kind of off late, and they got problems, I think, in the leadership sort of like department. The co-CEO has left. A lot of like big leadership names have left. I think I've been reading some stuff about the board has been rejigging, and some people are saying as Benioff kind of like lost it a little bit. He's kind of I can't remember. He got some like I can't remember the name. Like he was seeking advice from Will.I.AM and some other people like that, and they were like, what is the guy doing? Like, a little bit worried about Benioff right now. Is he okay? Are you okay, hun? As they say, like in England. But look, I mean, he's built an incredible business. It's the kind of the poster child or man or whatever for SaaS. And keeping up the growth rates that they have over the year, and whatever it is, very difficult to do. But yeah, just right now, I think HubSpot seems to be on fire, and Salesforce seems to have a lot of issues.
So it was Docusign, Salesforce. What do you think's next?
I'm not sure is the answer. Like, what's next? I mean, what we are seeing, let's say the companies that are like having kind of real issues, is generally those that in COVID really just kind of like raised a shit ton of money, benefited from COVID, but had no plan post-COVID, right? So in some ways, I'm really kind of like dumbfounded by some of this, right? Because there are a number of companies, let's say like Hoppin for once, right? It raised 400 million or maybe more, got to a valuation of 5.5 billion, got some of the best VCs, in the world on their board and on their cap table. And there was not really a good enough plan post-COVID. And people had to kind of realize that COVID was going to end at some point and that there needs to be a kind of like post-COVID strategy. And there wasn't a good enough one. They just kind of thought, well, like people will still like virtual events and it will still keep going. But that just didn't happen, right? And I think I'm just surprised. And I can't, on the spot, I can't remember. There's like a bunch of companies where it's kind of like similar experience. Maybe Shopify, I'm not sure, but like as an example, where these guys just did tremendously well, and like, oh shit, like life post COVID is not the same, and this is why we're having to, kind of like cut everybody and make all these kind of changes and effectively like these businesses could die, right? So yeah, surprised to see that.
Well, Elon Musk came out, scared the shit out of everybody. I don't know if he had any motives, behind that, but cash preservation is key. You're throwing an event, just like software, people want a good deal. So you give them a good deal by committing for a number of years. Are you going to have people crapping out? How do you recommend going about that, or you're not in that boat?
Last year, we had 2 customers that, because the recession has been talked about, I think since like May last year, right? And Sequoia came out with their deck or whatever to their portfolio companies. That was kind of, this is only supposed to be for the portfolio companies, but happened to go viral somehow. Since then, it's been a topic of conversation. And I think like all of these SaaS companies that are quite not yet profitable, had really then started to think about, okay, we've got to make some, difficult choices here, really to kind of, get to be much more capital efficient business. And what we found, we had, I think it was only 2 deals for the last conference in Dublin, where they said, look, we want to move this partnership to 2023. Right. So we experienced that and we did that. And actually, in this case, we had the cash in the bank. They didn't ask for the money back. And they said, well, can we move it to next year? So they kind of move it, in their financial statements to an investment for 2023. And now for this year, everybody that we've signed up for 2023 so far is obviously fully aware of what's happening in the market environment. And they are being cautious, but they are spending kind of with us. And they're signing contracts, with some, protection, around it. But I feel, although I don't know, that a lot of them are very, well-known, healthy companies. But, on the face of it, I don't see what's going on, within their P&L. And that we should be fine because these feel like they're companies that are not at risk. But you never know, what happens in this game. But I think in general, we should be fine. And I think the strong events, the events with big brand names, and you mentioned SaaStock, and I think us and Web Summit, like we'll always find, if one customer kind of pulls out, we'll find another one, and it'll be a shame to see them go. But still, I think the market size is very good. The demand is high. So yeah, like last year was a record year for us, and this year we're going for 60% growth, and fingers crossed we get there.
What are the multiples now, guys? I won't hold anybody to it, but you're going to have this event in May, and want to buy. What's the numbers have kind of dropped, so I hear. Carney, you got any thoughts? And then Alex, you can follow up.
I don't know. I mean, I would say half to start. I mean, the multiples right before 2022 were anywhere from, I saw as high as 70 times earnings on these startups. I think with the inflation and cash not being out there and a more focus on EBITDA or cash EBITDA, A lot of these firms were growing by hiring a lot of reps with very little territories and losing a ton of money in that process. And so I think there's going to be a huge pivot and overcorrection that's been going on. A lot of these startups have been rearranging their sales teams to be a little bit more focused and give them enough chances to win. And then, but I think the valuations have probably cut in half.
Are you seeing anything like that out there, Alex?
Well, I think, yeah, I mean, like in some cases more. One example, but this is real extreme, and I was reading about this the other day. So they're not quite, I would say, B2B SaaS, but Bolt, the kind of one-click payment company. I can't remember the name of the founder, but they raised what was it? I think it was the multiple was 367 times revenue. So they were at 30 million. And they were valued at like 11 or 12 billion, right? It's fucking a joke, right? It's absolute crazy. And those are the crazy times of COVID. And that's why we've got a big market correction, because people were doing deals like that, right? And it's just, who knows what people were smoking, back then. But now it's much more sensible. And actually, I think just for, I would say like a non kind of real like market leading company, probably looking at, maybe like 5 to 8 times forward revenue, something like that. Whereas, for a non-market leading company, it could have been, 10 to 20x, let's say like, more than a year ago. Profitwell, for instance, Patrick Campbell, I don't know if you've had him on the show, but, he's spoken at all the SaaStock conferences pretty much, and he bootstrapped that business to about, and this is unconfirmed, 25 million ARR. Large part of that was services and a bit of SaaS. They were acquired for 200 million. It went through the transaction like deal done, I think like in April 2022. So just before the market crashed, right? So he's getting what is that? It's kind of 10x revenue there. And had it been a few months later, could have been significantly less, but 200 million, like fair play, bootstrapping, one of the biggest bootstrapping deals, certainly that I'm aware of. So he did that deal at the right time, because had he done it a couple of months later, like it wouldn't have been as much.
So Alex, that's got to be pretty good for you. If the multiples are down, you would think a lot of the money guys want to come out and get some deals. So maybe it's the opposite for you. Right.
It is good. It is good. So at this, like a lot of VCs are getting better terms, right? They're investing at better rates, which is good for them. And the same on the M&A side, right? There again, it's quite good, I think, in terms of what we're seeing in the activity. But yeah, in general, for the founders and how we can help them, through these times, there's a lot of education that we can help about, building your businesses, like, running them through recession and growing through a recession without, too much kind of focusing on, let's say doom and gloom, but really kind of helping people and founders around capital and connecting them with, the right investors, whether it's BVCs or revenue-based financing companies like FounderPath or CapChase. The
people that are succeeding in this are going to succeed in this out of all the investments. A lot of VCs, from what I'm hearing, there's a bunch of VCs that are struggling because they may have outstretched their own cash to invest in companies that they're not going to get the money back from anytime soon. The PE firms, once again, I think are going to reign supreme here, because they've always gone in and bought with a lot of discipline, rigor, and it's all about getting down to the cash and cash EBITDA for the most part. I think the PE firms are going to excel, while the VC firms, I feel like some are going to struggle a lot. The rule of 40 is about revenue growth and profitability margins, but it really comes down to I think the key components are GRR, NRR, and ARR. If you're growing your ARR at 40%, retaining it at above 90%, you're almost at the rule of 40, and that means you're almost in the flywheel type of area in terms of startup growth, and investors will come and you'll get a big exit. If you're struggling at any three of those pillars, NRR, GRR, or ARR.
What are those three acronyms, Carney?
ARR is annual recurring revenue. GRR is gross recurring revenue. So what that takes into or gross retention revenue, what that takes into consideration is how many, what was the ARR a year ago to the ARR today, but it doesn't take into account expansions. So it just looks and says, are these people still here? And then NRR takes into account expansions. So are your current client base are they expanding? So the way I look at it is, what's your current annual revenue? Are they renewing or retaining? Are you able to retain them at a good clip? And hopefully, are they expanding? So if your NRR is, 80%, but your GRR is 90% and your ARR is growing at 20%, what that's really saying is you're going up, but over the long haul, your clients are retracting. They might be staying with you, but they're not staying with you at the same pace. So you need all of those to be higher.
So is Rule of 40, is that a new thing, or is that just something
No,
new
that's always been there.
It's always been there?
I haven't called it the Rule of 40, but that's really.
I know Rule of 72.
The Rule of 72 was what we are used to, but the Rule of 40 is purely, I think those are the three driving components of the Rule of 40. It really comes down to how can you get to, a profitable EBITDA, and the only way you can do that is by acquiring your clients and expanding on them at a healthy clip.
Alex, what is the SaaStock founder membership?
Yeah, so this was let's say something that was born out of actually the COVID years. So when we had to kind of pivot to virtual events only, we saw that something was kind of lacking, from what generally our founders get from SaaStock. And what was lacking was that founders getting together, and supporting each other and sharing, stories, the highs, the lows, the mistakes, etc. It didn't really replicate on virtual events. So we spoke to our customers and we had a look at how can we design something that will provide this value to you. And then from all the customer development work that we did, we came up with this idea that we were in a good position, to build a support organization for B2B SaaS founders. And thus we created the SaaStock Founder Membership, launched that in May 2021. The aim there is, initially for us to get and help 1,000 SaaS founders get to 10 million in revenue. So that's part of our objective and mission there. And how do we do that? We create, these curated mastermind groups for SaaS founders to come together, to be with each other, support each other, help, share best practices and advice. Then we're building out a private network of SaaS CEOs that are on their journey to 10 million ARR and connecting each other, and then running specific education events, around that as well. So we do monthly online kind of workshops, but we also do, which I quite like the most, these in-person retreats, where last year we took 30 founders to the Amalfi Coast in Italy for 2 days. It was really hard, 2 days of drinking wine, eating lots of pasta in the sunny Amalfi Coast in Italy. And we had a great time, as you can imagine. Lots of limoncello as well. But I think for me, one part I really love about my job, apart from these, exotic locations sometimes, Dublin less so, Austin maybe, Amalfi Coast definitely. And we're going to Mykonos in May with 40 founders. But I just love hanging out with founders. I mean, I'm a founder myself, but not running a SaaS business. And to spend 2 days with a bunch of entrepreneurs, shooting the shit, talking about business, sharing problems, etc., and generally knowing that what we're doing, and in simplicity, like I think I described the Dublin event, where hey, we just we find a venue, we bring everyone together, and the magic happens. It is a bit like that, we pick a date in the calendar, pick a lovely location, get people together, and the magic just happens, right? And I just really enjoy that part of my job. Sometimes I get a little bit of stick from my partner Gemma, where it's like I have to go to Mykonos, or I have to go here or whatever, or I was out for dinner with founders, at a really nice restaurant. But it's my work, it's my job, right? And I love doing it, and it just happens to be fun and the thing that I really enjoy doing. But yeah, back to the SaaS.founder membership, we're just making it a less lonely job for founders on their journey to 10 million ARR. So if anybody's interested, go to the SaaS website, SaaS.founder membership, check it out. If you want to get to 10 million in revenue, like I know from doing 340 podcasts, maybe 341, that from everybody that I've interviewed, nobody's figured it out themselves. They've always got support, help them get there. One example, again, it surprises me, but maybe it shouldn't. Like Godard Abel, the CEO of G2, right? He's a three or four time entrepreneur. He's had 2 exits, one to SalesForce, one to somewhere else. I can't remember, but the exits have almost been $1 billion worth, across those 2. G2 is over $100 million in revenue, and Godard Abel is still part of support groups, builds a support network infrastructure because he wants to get better. He doesn't know everything, even though he's had all this success. I would have thought if I was him, with my inexperience, that once I'm at Godard Abel kind of level, I don't need to go to these monthly, kind of meetups and talk to other founders. But actually, it turns out that there's still a lot of value in that, right? So if you're even at that earlier stage and you're a first-time founder, it's definitely something that you need. And so we're just trying to build the world's best version of that for B2B SaaS founders. And something I'm super passionate about at the moment.
Alex Theuma, CEO, SaaStock, CEO and founder. Thank you for coming on the SaaSholes podcast.
Thanks. It's been a pleasure to hang out with you two, SaaSholes.
You are an honorary SaaShole, Alex.
Thanks.
Now, yes.
Our show is supported by viewers and listeners just like you on patreon.com/SaaSholes. Brent Keltner's Winalytics Revenue Acceleration Playbook Masterclass. In only 8 weeks, help your sales and go-to-market teams start to build the mindset and skills needed to succeed in the new buyer environment. Weeks 1 to 3, read the book and learn a new approach through 20 successful company stories. Week 4, all go-to-market team kick off and receive self-reflection questions and mindset self-assessment. Weeks 5 to 7, collaborative sessions with prospecting, sales, and customer success on the shared journey to a new mindset. Week 8, all go-to-market team presentation and discussion. Winalytics, build the revenue organization you want. Request a free 60-minute growth consultation at winalytics.com. Ask for Brent and say Big Pete sent you.